Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking at a bigger three-wave corrective structure and then continue towards the upside. In this scenario, we look at a double zigzag, which means an ABC zigzag in a wave W with an ending diagonal here in your wave C. Any corrective structure possible in a wave X, but most commonly wave X is a zigzag or double zigzag, and in this case it is labeled a WXY double zigzag ABC and W, sideways correction in X, and then another nice ABC to the upside in a wave Y, and then we look for another three-wave corrective structure to the downside in an ABC 535, right? So five-wave structure in a wave A, an impulse. We look for a three-wave corrective structure in B, and then C to the downside to aim for the common target area here for your wave Y in a double zigzag, which is between 85k and 81k. You can see a bit of support here, the daily gap high, as well as a daily naked point of control. Now the minimum target for your wave B is the 0.382 retracement taken from the start to the end of wave A, and also time-wise the minimum target is respected, as you would like to end the wave B at least after the 0.382 fib time taken from the start to the end of your wave A, which also would be the case with this high. Now it doesn't mean that that is the end of your wave B, but we have to be aware that it could be, and you look for continuation to the downside, which is basically what the green polyline shows. Now alternatively, you're going to move into the blue box, and the reason it is blue is that the most common retracement target for a wave B is this blue box between 96.9k and 100.3k. Now that is what the dotted line shows here, but then you still look for an impulse to the downside. Important support for the dotted line scenario is actually what we have here to the downside. So just below us here, 92.4 to 92.6, there is a daily level and the range value area low of this section here. So that would be important support for a potential move towards the upside. Of course, in general, if price then takes out this high, it is interesting to look at the resistance here sitting between 98k and 98.6k. Just above that, just above 786 here, we still have a little bit of resistance left, 100.4k to 101k. So keep those levels in mind. Now if price locally shows an impulsive structure to the downside and it takes this low, one has to be very aware that an impulse is your bearish scenario, but the moment you take out the low, a flat becomes the bullish scenario. And I just want to show it just in case, but then you're looking for the five-wave structure in your wave A, three-wave structure in your wave B, and then you get your C to the downside. Now this would be an expanding flat, right? An expanding flat in your wave B, labeled then as a wave A, B, C. Common target is 90k to 89.4k. So if price does move to the downside, be very aware of this area and observe the reaction. We do have some additional support here as well, 89.4 to 90k, perfectly aligned with this box for a wave B. So it's just something to keep in mind, but only relevant if price takes the low, which it hasn't yet. I just want to prepare you. The bullish scenario is a finished zigzag to the downside in an ABC, and then we want to see price move towards the upside. Now what is relevant here is that you start this move towards the upside with an impulsive structure, get a three-wave retracement, and then you want to continue towards the upside and specifically take out this high here at 102k, as that is the invalidation for your bearish scenario. So that is the relevance of that top. Now there are a few differences compared to the bearish scenario. Most notably, this move down and this move to the upside are counted significantly different. So here, this move down is labeled as a wave B, while in the bullish scenario, it's an ending diagonal. So in the ending diagonal is a five-wave structure. Wave B cannot be a five-waver. Has to be a three-waver. So that means you then have to divert to a WXYXZ, very rare, right? Or somehow get a WXY in here that looks nice with its proportions. And then you have your wave C to the upside, which has to be a five-wave structure. So now it's not a three-wave WXY, a wave C is an impulse. So then you need to count 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, and then a wave 5 towards the upside. Now what you also see is a 1-to-1 here on the chart. That's a trend-based fib extension taken from the start to the end of A to the end of wave B. Your most common target for a wave C is this 1-to-1 area down to the 1.236, so that's a little bit lower still, but 86.4k is generally regarded as a minimum target for your wave C, at least commonly, right? The minimum target of C is taking out the low of A, and it's nice it also took out the low of the corrective B here, right? But this generally would be an expected target, which of course is not reached. We also have a lot of high impact news this week, starting tomorrow on Tuesday, and then Wednesday, Thursday, and Friday as well, all at 2:30 p.m. So make sure you trade safe this week, as the volatility can be high. And if we then look at the probabilities of the scenarios here on the 4-hour time frame, then at the moment the probabilities are higher for the bearish scenario, which is the WXY scenario here, compared to the bullish scenario as per the analysis earlier in this video. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.